Yeah, good morning, everyone. So we saw correction in the US market, mainly driven by poor job data. The job data came in at 73K versus expectation of 1 lakh. Uh, the other thing to surprise over there was that the previous month's job data was curtailed or declined substantially. Earlier, they had indicated that the US job gained by around 1,47,000 in June month, but that was revised to 14,000 only. And similarly for May also, the job increase was earlier indicated at 1,25,000, which was revised to only 19,000. So that has created a shock, and that are indicating that there is a possibility of US economy slowing down. And as such, we saw various changes happening wherein interest rate expectation of Fed declining interest rate came down very sharply. Now the market expect 80% chances of rate cut uh, in September meeting, whereas earlier it was expected below 50. Also, dollar came off. Dollar index declined by almost around 135 basis points as compared to Friday same time. And also interest rate uh, of the 10-year bond yield in US declined by almost 12.5 or 12 BPS. So all these are impact of these data, and that has even taken down the US market sharply on that day. Uh, Futures are a bit positive after such a sharp decline. So maybe a marginal bounce back as compared to what has happened on Friday. Asian market are also indicating more of a soft start in today's trade. Most of the market are down. Apart from that, oil has also come off on account of reduction in uh, increase in oil production expected from OPEC. OPEC has taken decisions to increase the oil prices, and that has resulted into oil price coming down uh, by almost around $1.5. So overall seems there is some the uncertainty continued and a lot of volatility is getting ground, and that is impacting the market. What we see that the impact of higher tariff on India will continue to weigh and will have a negative sentiment. So any up move because of the bounce back, if we see, then can be used to reduce the position until and unless we get some clarity on uh, the rate tariff which US has imposed, specifically on the companies which are directly related to export to the US and are larger dependent on the US for export. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Today, the market is likely to open on a positive note, and we're likely to see us bounce back rally into the market. Nifty has touched the feet of 61.8% of a Fibonacci retracements, whatever the rally we have seen in the past few trading sessions. It's manages to take that support level and just hovering nearby that level itself, which comes to at around 24,545 levels. Looking towards the technical setup, we believe that the bounce back rally cannot be denied from the current levels after such kind of a fall of almost 1,000 points from higher levels. So for today intraday purpose, the first resistance will be placed at around 24,640. Beyond that levels, we are likely to see the extension of this pullback rally towards 24,700 to 770 levels. Whereas on high lower side, 24,500 is the immediate support level. If it's break that level, then only we can witness some sort of profit bookings, which might take a Nifty towards 24,440 levels. The overall view, bit positive at the current levels because we believe that the Nifty is currently trading nearby the support levels, and we expect a bounce back rally in the near term future. Coming towards the bank Nifty for today intraday purpose, the resistance is placed at around 56,000 levels. About at level 56,270, 56,500 levels can be tested on the high side, whereas the support is placed at around 55,540, 55,300 levels. Stock specific. CCL really looks very positive. We have covered this particular counters on the monthly chart as well. So those who want to take a long position, they can definitely create at the current market price. The counter has given the flag pattern breakouts on the weekly charts, trading in the upward rising channels, well placed above all the important moving average. So one can definitely go for a long positions into the CCL. Another interesting counter looks good on the technical front is the Star Cement. This is the counter which really doing very well from the last 2 to 3 trading session. It has given the cluster resistance breakouts of 240 to 242 levels. The volumes are really increasing from the last few week along with the price momentums, which gives very strong indications on the technical front. We are looking for a target of 265 to 270 levels on high side, so one can go for a long at the CMP by keeping the strict stop loss of a 235. And that's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. On the derivative front, see, expiry just happened last week, and looking at the overall data, the data still seems a bit negative. Importantly, 24,500 put strike doesn't have that much of open interest built up. That means if that is breached, we can probably see Nifty go down even further, while resistances are placed at 24,800, 25,000 levels with a considerable amount of call built up at those call strikes. So doesn't look very good at the start, but yes, we need to see how the data pans out. PCR around 0.75 is still near the bottom zone, still can go down up to that 0.55, 0.6 odd level, so some space there. The VIX has started to move up after reaching 10 and a half levels, and it is now near the 12 levels, so increasing, which is also not a very good sign. Still, it is at comfortable levels. Once it goes up above 15 levels is when you can see increased selling pressure that can come in. As of now, for the next couple of days, we can see 24,500 being a very important support area. If that is breached, further selling should be done. From the stock specific front, most of the stocks witnessed selling. Even banking witnessed selling. Some of the banks witnessed some fresh short positions on Friday, and we can expect some more selling in this sector. IT sector is one sector where a lot of shorts were rolled over, and it has come to a point where some short covering should come in. So in the next couple of days, IT should provide some support to the markets where IT, TCS, Infosys, Tech Mahindra, these are the stocks which can probably witness some buying action going forward. Yeah. So look out for the same. That's it from my side. Like to ask the fundamental team to take over, please.
Good morning. Uh, Auto July month number were released. So overall, most auto companies performed as expected in this month. Mahindra Auto, TVS Motor, and Royal Enfield did well. However, Mahindra Tractors and Hyundai Motors showed weak performance, while Hero Motocorp, Bajaj Auto, and Eicher numbers were in line. Thank you.
Yeah, apart from that, uh, Glaxo came up with the numbers and the numbers were poor, and share price corrected on Friday by almost around 7%. But what we see that the outlook continued to remain positive. This quarter, the impact of decline was mainly driven by the general medicine having some weakness, wherein they underperformed the market. The market grew by around 8.6%, whereas they grew by 6.6%, mainly on account of two therapies which got impacted, that is uh, derma and infection. So that has had some impact on it. And what we see that there was a volume degrowth of around 1% in general medicine and value growth of 2% in general medicine. But apart from this, the other portfolio has done very well. Vaccine has grown by around 8.6%, wherein pediatric vaccines and has performed in line. But the adult vaccine, which is comprising of Shingrix, that is herpesite vaccine for herpes zoster, has done very well and has shown good growth. Now company sells around 10,000 doses every month, and earlier target of 1 lakh uh, shots in a year is likely to be achieved, and company can do around 100 crore revenue in FY26. Then other specialty drugs which company has introduced in last 2 years, that is Nucala and Trelegy, both have done comparatively well. Uh, Treasury has grown by around 1.8x. Uh, Apart from that, company is also introducing two more drugs, that is mainly in oncology, that is Jejula and Jemferli. Both of these drugs will be introduced on 15th August, and the TAM for these two drugs together will be around 900 crores. These are very specialty drugs used for oncology and are supplied to through hospitals. Margin has seen improvement of around 290 basis point year on year, and this trend company continue to hold a higher margins in this period. Company has indicated that they are likely to grow by in double digits and likely to maintain margins. What we see that the Glaxo International has a high focus on Glaxo India now, and they are introducing a lot of new drugs here in India, along with the world market itself, and without lag also some of the drug has been introduced. So that is likely to accelerate and improve growth for the Glaxo. So what we see that the long-term outlook continue to remain positive for Glaxo. Any corrections in the Glaxo prices can be used to buy this stock. Then Tata Power came up with the numbers, and the numbers were ahead of expectations. Revenue grew by around 4.3% year on year and 5.4% quarter on quarter. EBITDA has performed comparatively better. EBITDA margin came in at 22.9% versus last quarter 19% and last year 20.7%. The MCX results were good, but in line with expectations. The revenue grew by almost 60% year on year and 28% quarter on quarter. EBITDA also grew by around 50% quarter on quarter and 82% year on year. But this was all expected by the market, and the results were more in line with expectations. Share is trading at around 50 times FY27. Share has already performed very well ahead of the result. ITC number were in line or marginally ahead of expectations. Cigarette revenue grew by 7.6%. Calculated volume growth is around 6.5%. FMCG sales grew by 5.3%. Overall, agri business has shown very high revenue, but that is more of in this quarter and will neutralize in the coming quarter. Paper business continue to show struggle, declining. Overall, EBITDA margin came in at 31.7% versus expectation of 35%. The lower EBITDA margin is on account of higher agri sales, which has a lower margin. Excluding that, the margin was stable. Stock is trading at attractive valuation of around 24 times FY27 earning. One can accumulate this stock. Then Federal Bank came up with the numbers which were below expectations. Advances grew lower at 9% below industry growth, and also quarter on quarter declined by 2.7%. NIM also declined from 3.12% to 2.94% quarter on quarter. Asset quality also saw some strain, wherein provision came in at 400 crores versus last quarter 138 crores, and also slippage also came higher at 661 crores versus last quarter 492 crores. So the results were below expectation, can have some impact on the results on the share price today. ABB also came up with the number which were below expectation. Profitability for the quarter was impacted due to forex volatility and special forex volatility and one of extraordinary provisionings. But the revenue growth has now slowed down and has just increased by 12% year on year. Order booking also has shown decline, and now order book is up by around 5.7% year on year at 10,064 crores. EBITDA margin declined because of this few one-off, but still will remain below expectations. So overall results were below expectation. Market share price may see some corrections in today's trade. That's all from us, and I'll request technical from commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, gold silver prices already opened a bit gap up. One should wait for a dip around 99,800 in gold and maintain a stop loss of 99,450. And on upside, expected to test 1 lakh 400, 1 lakh 500 levels on upside. Silver too, one can initiate a buy on dips around 1 lakh 10,000 and maintain a stop loss of 1 lakh 9,000. On upside again, 1 lakh 11 500, 1 lakh 12,000 other levels where one can book profits. In metals, copper, one can initiate a buy around 878 with a stop loss of 872. And upside again, it can test the resistance area at 885, 887. So profit booking advisable on higher end. and zinc to buy with a stop loss of 260 for a pullback around 265. And crude oil prices have corrected. Pullback cannot be denied. Buying around 58.50 with a strict stop loss of 57.70 for the pullback till 6,000. And in natural gas, prices are expected to consolidate from 255 to 275. So buying in trading in this range is recommended. That's it from us. Thank you very much.